Hi, I'm Brooke Thackeray with Horizons ETFs. Thank you very much for joining me today. Today I'd like to use the Horizons Seasonal Rotation ETF, ticker symbol HAC. Its weekly commentary is the basis for this market update. So let's jump right in and take a look at the market action last week. Here we can see the S&P 500 lost 0.3%. The Canadian stock market put in a solid 1.5% gain. The big news of the week last week was that the CPI number in the US came in at 6.2% on a year-over-year basis, which was higher than the expected 5.9%. Inflation has been running higher than expected, and investors are starting to get concerned. The Federal Reserve keeps trying to reassure investors that inflation is transitory, but consumers and investors are seeing inflation continually tick up. So there's a little bit of a concern there. We did see the stock market retreat on Wednesday, but then on Thursday and Friday, we did see the stock market bounce back as well. This week coming up, we see the focus on the retail side of things because we do have on Tuesday, we do have the retail sales coming out, the month over month for October report coming out. It's expected to come in at 1.1% growth, and that compares to September's 0.7% as well. It's going to be interesting to see how investors react to this because we do have a few companies, retail companies, reporting this week, including Walmart, Kohl's, Macy's, TJX, I should say, Target, and others as well. So there's going to be a real focus on the retail sector this week in the markets from investors. Last week, HAC was fairly quiet, and if we take a look at what was happening in the markets overall, let's start by taking a look at the daily action for the S&P 500. You can see here on Monday, not much of action. Tuesday, we saw a down day. Wednesday, a down day. Positive on Thursday, and then a bigger update on Friday. So overall for the week, we did see a little bit of volatility, but the S&P 500 did end up down slightly negative for the week. If we take a look at what was happening with the yield on the 10-year Treasury note in the U.S., you can see here's Monday. We saw from the previous week, on Monday it went up. Tuesday it came back down. Wednesday up. And then Thursday was closed for Remembrance Day and Veterans Day in the U.S. And then on Friday we did see the yield tick up again for a close of 1.58%. A lot of this was to deal with the higher inflation numbers than expected, and bond investors expecting or demanding a higher return for their investments as well. If we take a look at the action last week for the different sectors of the market here, we can see here as a benchmark, we've got the S&P 500 down 0.3%. Look at the consumer discretionary. That was down big time. That was a lot to do with what was happening with Tesla. We saw Elon Musk selling a chunk of his stock in Tesla, and which drove the price of Tesla down last week, which affected the consumer discretionary sector. The material sector was a big winner last week, as we saw the steel sector go up as well, metals and mining increase. So we saw some of the real pure cyclical sectors and subsectors move up quite a bit last week, which is positive. Energy in the U.S. Was down last week, despite this talking about not having enough oil to supply the U.S., or at least pushing prices too high as well. But we did see the energy sector down last week. The healthcare sector was positive. Financials with rising rates got a little bit of a boost as well. I want to take a look at some of the subsectors of the market as well that from last week. And here you can see, here's in this case, here's the S&P 500 again. Look at the, in this case, silver was a big winner. Silver's been struggling a little bit over the last few months, and all of a sudden it's starting to show a little bit of strength. Now, it does have its seasonal strong period starting in late December, and sometimes that can start earlier. And we've seen that happen in November as well, or in the last few years a couple of times. So it's something to watch out for. The silver has been picking up a little bit of support here, and gold was also up quite nicely as well last week. As investors really took a look at the inflation numbers and said, well, if inflation's going up, then gold might be a good purchase. And this was despite rising inflation rates, rising interest rates at the same time. Metals and mining sector was up quite strong last week. The steel sector was up as well. Biotech was down. We're outside the seasonal period for that. And in this case, home builders last week. That's an interesting one because we saw rising rates, which usually puts downward pressure on the home builder sector. Now, this week coming up, we do see the month-over-month building permits come out, and also home sales as well. So maybe investors will position themselves a little bit ahead of that before the reports come out this week as well. This week, investors are going to focus on the retail sector. And it's going to be an interesting week because first of all, we do have the retail sales report coming out this week, and we do have a number of closely followed retail companies reporting their earnings. Investors are going to be looking out for what CEOs are talking about as far as the sales on a go-forward basis, and they're also going to be very interested on how the supply chain disruption is affecting sales for this Christmas. This Christmas could be a little bit different because some of the consumers may have already pre-bought their Christmas presents early this year, given some of the supply chain disruptions that have taken place, and trying to avoid that. And as well, other consumers may be saying, well, instead of buying you the gift that I can't get for you now, I'll give you an IOU for when I can get it. So it's going to be a bit of a mixed situation here, but investors will be focusing on the comments from the CEOs on both of those aspects as far as the overall market goes. And I think as well, investors are also going to focus on any comments from the CEOs on inflation and how that's impacting the companies and their go-forward sales as well, because inflation has been rising much stronger than expected, and companies have been trying to absorb some of that cost, but they're going to have to pass it on at some point and raise prices. Now, we've already seen some companies raise prices, but there's going to be more and more pressure for that on a go-forward basis. So that's also going to be an interesting aspect as well. Thank you very much for joining me today.